teaching like this. Sometimes I'm also interviewing people, even at national level, the government JPA level. I also interview people who would like to further their study, to give government scholarship, JPA scholarship, etc. So it has been quite so many years already. I've been interviewing people. So basically, we have to understand that you have to market yourself. Your PNGK, even you are best student, you got a 3.99, doesn't mean that you are good in terms of making yourself, as a good person to any particular company that you are applying the job for. So your wisdom, your integrity, that the most important thing. And then your degree is just a piece of paper with 3.99. That is nothing. You do not think that because your degree is 3.99, you are better than the rest of the class, as compared to, but at least acceptable. 3, 2.7 and above is acceptable. Sometimes 2.7 can actually beat 3.99 CGPA in terms of work performance. So don't be too, what we call it, don't look down at yourself if you get less than 3, because you can do it when it comes to a real situation. But now the fact is, so many people, so many students, not only from UM, but we have from UTM, UTHM, UITM, and then IUKL, and then some other private university as well, like Reading University, Nottingham University, and then University UMK is also going to offer this course from next session. So basically, you have to compete with other graduates as well, and then those who come back from overseas as well. Although it's not many now, but at least they can create their own rapport in terms of their what we call it, the degree that they hold, especially those who come from Reading, UK, So because it is the best university that produce real estate student for the last few decades. In fact, from when Reading was the first university who we started to offer real estate course. No, none, the first university. And then whenever they have something like the thing that we are doing now, you learn about the 5 methods of valuations, and you learn DCF, and you learn about some other situation like DCF when we use a shortcut DCF or the growth rate, etc. So basically, all started from Reading University, because that is the first university that introduced this syllabus. So normally, whenever they have something new in terms of like DCF, gross DCF, for example, in the 1990s, it was something new in this profession. So they started to teach this student first at Reading University before other countries accepted the method. So because when they started, it's something like trial and error. When you want to see whether teen life is good or not, so basically you have to purchase. You cannot rely on your friend. Your friend say, "Oh, it's nice. Or this one, just buy this one. Got more bubbles, etc." So if you do not try yourself, because you have different taste yourself, your tongue is different with your friend. You have to try, and then you say that, "Oh, no wonder you said it's very good." So something like that. So the same thing for whatever new in the profession. Last time it was tested by Reading University first, because they have the College of Estate Management. There's all the books, the tables that we are using all come from Reading University. Like for example, a Paris table, a Bocox table, and then Harrison table. But one that introduced to you is basically applicable. So all of the tables come from lecturers from Reading University. So it happened to be I was lucky. I was admitted to join Reading University, and then I did study for 3 years. So that's why I know what's happening there. So basically, so in most cases, project financing is highly dependent on purchaser-generated fund created from 10% deposit. So all the 10% deposits come from usually our savings with EPF. So wherever we want to purchase the first unit, so it's usually, to help the first-time home buyers. So basically, we can get 10% out of the amounts that we actually save with EPF, and then the 10% will actually be paid to the developers, and then 90%, the balance of 90% will actually be from bank. So the bank will actually approve the 90%. That's what the value of the loans is all about, and that particular loan or the mortgage created for that particular loan, the originator of that particular loan will actually sell the value of that amount after 3 years or 5 years, depend on the assessment, to the secondary mortgage market. So most developers apply for project financing from banks at the early stage to cover the initial costs of infrastructure and working capital. This is the thing that I said just now. Most developers, even cash-rich developers, they still apply for fund from financial institution in order to establish the cost of infrastructure and working capital. So this is called bridging finance. So when they want to start, it's called the convertible finance. I think if I explain, you will get confused. We just wait until we come to that particular stage. But the thing is, when we talk about project financing, is basically we refer to end financing. And then once the funds are generated through the progress payments, so progress will come to the bank. We will see how the progress payment stages of payment available from in the system. So in terms of government policy, so the objective of housing policy is to increase accessibility to adequate, affordable, and quality houses. And then the government usually has been very. We have the home ownership campaigns, which will actually be completed by 2021 because of the COVID. So not many people actually interested to purchase because they cannot go to any place that they organize this kind of activity, especially in the big hypermarket, for example, Mid Valley. Usually we have a crowd there when it comes to a home ownership campaign. So basically, with the support of the government, home ownership will be promoted from time to time, started from 1970s. So in terms of housing loans originators that we have seen in primary mortgage market, we have discussed. So basically, we have private as well as public. So private that come from financial institution, as well as non-financial private enterprise. That means a financial institution is a housing credit institution that we have discussed before. Non-financial private enterprises, the companies that actually offer their staff to have a loan, for example, with very low interest rate. That means they will have their own staff. So these fall under non-financial private enterprise. And then publics that come from LPPSA or Treasury Housing Loan Division. This one only open to government employees. So in the primary mortgage market, we have primary lenders. You can see here, we have commercial bank, finance company, Treasury Housing Loan Division, Bank Samurai Malaysia, ITEXA. So this one you can actually check from the Bank Negara Malaysia category. So basically, they update from time to time in terms of the performance of each of the housing credit institution. So like the one I'm giving here, you can see the performance. So basically, Treasury Housing Loan Divisions, when we talk in terms of the lending rate, for example, LPPSA, so is static, 4% throughout the period. No matter what happened, they never change. So 4% all the time from 1970. This is the government loan. So the concept of state system come from this kind of products. And then we have banks, Rakyat, and then MBSB. MBSB, like I mentioned before, the name is Malaysian Building Societies Berhad, that we have in the bank-oriented system we have discussed, if you remember MBSB. So basically now the name is still the same, MBSB, but it is not the not the building societies like in the UK anymore. It's just something like ordinary financial institution. And then we have Borneo Housing Finance Berhad, we have Bank Simpanan Nasional, we have Sabah Credit Corporation. So basically, access of fund and availability of fund are very important to housing developments. We need fund, and then the accessibility in terms of housing loan itself is very important because it will help the purchaser to actually purchase the unit. However, when we have too much surge fund in the market, so it will become the main sources of instability in the housing finance system. This is what happened in 1997-98 because excessive supply of the housing loan. So 1% medium income group can actually purchase 5 units, 6 units, because the demands are always there, and then people keep renting the unit. So basically, the incomes are there, and the money, the market continue to be very good. The price always increase. That's what happened. The same like 2015. So those who purchase the unit during this period and then sell now, even the price drop, but it did not drop below the purchase price that they purchased during 2011 and 2012. Those who purchased during that period, if you sell now, even the COVID, you are still making a lot of profit. Because when you purchase 200,000, for example, in year 2011, and then it increased up to about 800 to 1 million in 2015. So you make a more than 100% return. But now the price dropped from 2015. The price dropped, so basically the lowest point that it should reach must not be below 200,000. So that means before we go up again, the effects of 2 years after the crisis, like I discussed this now. So basically, the value will increase again. Now it's dropping, but it cannot go below 200,000 like at the time if we purchase. And then after 2 years, and then the market need to go back again about 4 years to go back to normal, to peak again. So basically, if you do not sell the unit, so you'll make a lot of money. So that's what I discussed through diagrams that are never shown in the lecture here, and I'm not going to show. If you join the seminar, so you should know what I'm talking about. So easy access to finance will actually help developers to come up with more developments, and then at the times that the economy is not so good, like COVID-19 now, most companies having problems during downturn. Now we are having downturn, and then it will actually result in non-performing loans. I also discussed this during the seminar, if you really follow the seminar. So in terms of the performance of Malaysian housing credit, as you can see diagram here, you can check Cagamas website. So basically, it's increasing. Cagamas started its operation. So we'll talk about Cagamas after this, what's their function, etc. But before we talk about it, we try to see the housing credit performance. So basically, Cagamas was incorporated in 1987, and it started their business only 2 years after that. So basically, you can see the securitization. The red line here is the cumulative housing loan from Cagamas, and then the blue one is from commercial banks and other finance companies. So you can see the trend, the one that I have until 2014. So you can check Cagamas website if you are interested to see the recent one. And then now we see the mortgage market. So basically, it is characterized by the following. So granted on floating rate basis. Floating rate basis, that means the rate is not fixed. So it's keep fluctuating from time to time. And then have maturities period between 15 to 35 years. And then as compared to other countries, even compared to USA, that's why the subprime crisis happened in 2008, because so many default. But in Malaysia, only good loans will actually be sold and securitized in the secondary mortgage market. So we have very low default rate. And then the foreclosure, that means the auction that I mentioned just now, will only take place when there is a need. But in terms of the rates that we are having as compared to other countries is quite low, and then the losses are very minimal in Malaysia. So the mortgage market exists when there is ready access to credit facilities. So it will be available, the credit facilities, only when there are willing lenders, and the lenders are able to secure funds at low mortgage rate. The primary lenders are able to sell some of the existing housing loan, and the lenders are able to raise fund to finance new housing loans on a revolving basis. So now we see the situation in Malaysia. We know that we have discussed before in terms of primary mortgage market, secondary mortgage market, and secondary mortgage market. So in Malaysia, from 1980s, the financial institution faced very tight liquidity situation. That's why we changed it from the bank-oriented system. Before that, we did not have the mortgage-backed security system. So because of very tight liquidity in the 1970s, so that's why we come up with a mortgage-backed security system where they were when the liquidity risk rising from the mismatch of maturities of the fund. So like I mentioned to you, when you want to release the money, it will be very short. The banks will come out only a couple of days after we sign the SMP, but to get back the money will be very long. The mismatch occurs there. Therefore, the financial institution will only be able to provide ready access to housing, so the loans at favorable rates if they can secure cheap fundings and reduce maturity mismatch. Like before we established the secondary mortgage market, the mortgage-backed security system. So basically, the mortgage was very expensive. So after that, it's become cheaper than it used to be before we have secondary mortgage market. So in the Malaysian housing finance system, you can see the model of Malaysian housing finance system here. So basically, we have Malaysian housing market, and then we have primary mortgage market, and then we have secondary mortgage market, and then we have capital market after securitization. So basically, capital market is here. So basically, the relationship between all these, like we have discussed in the international housing finances, are the same. So basically, we have primary mortgage market, where we have financial institution, is a conventional or Islamic, and we have secondary mortgage market, which actually come with securities. And then under securitization, we have Cagamas. Cagamas will come with the products, is the conventional Islamic. So you see that. And then, so the capital market will actually establish with institutional investors that come to purchase securitization. And then once they have all the money. So basically, it will help the housing market um, to develop further when people have more affordable mortgage products. So the primary mortgage market in Malaysia. So basically, we have talked about the originators. So basically, in Malaysia, the institution within the financial system as well as non-financial private enterprise, like we have seen the blue diagram before. So the housing loans are actually originated by commercial banks and financed or refinanced by Chagamas. So this is the SPV or the special purpose vehicles that exist in the secondary mortgage market. And then commercial banks are the main originator for the private sector. But sometimes so government employees also get a loan from commercial bank, especially those who have already taken a loan from government. So basically, they are also eligible to get more loans from a commercial bank, because for government loan, when we get the loan, usually we have to settle that loan first before we can get another one. You cannot get two loans at the same time. You must have the one loan. In other words, we sell the unit that we are having now, and then we can get another loan after that, which are more debt service ratio, DSR. So basically, we have to approach commercial bank as well. So, but those government employees, the advantage is when we use the fixed rate mortgage supported by the government, although 4% as compared to commercial banks. Now some banks offer even below 4%, but we have to understand the way that they calculate for the commercial for the government loans is really based on the declining balance, which actually when we sell, we still have more profit as compared to other commercial banks. So Treasury Housing Loan Division is the main originator for public employees. So unlike the USA, originators also provide loans in the form of bridging finance. So USA, they also provide loans in the form of bridging finance. But in Malaysia, we do not. We provide loan in the form of bridging finance, but the mortgage that created for bridging finance is not allowed to be transacted in the secondary mortgage market. We only deal with the mortgage, housing mortgage, and at some points of times, the industrial mortgage is accepted as well, and then credit card loan not yet. But I'm sure one day, like the USA, so Chagamas will also use their credit card loans for the purpose of securitization as well. So in this context, pool of housing loans are traded in the secondary mortgage market. So I told you before. So they are sold in the pools, and the housing loans by commercial bank, financial institution, and the housing loan division dominate the financing of housing market activities in Malaysia. So in terms of secondary mortgage market, so it was established in 1986, and then commenced business in 1987, and started to come up with securities 2 years after 96. So basically 1998, they already have come up with the securities. So Chagamas is not like ordinary financial institution because they are not classified as bank, and then they are not listed under Bursa Malaysia. That's why I said that the system that we have is an institutional investor will actually purchase securities through the so-called script-less trading system. That means online. They don't have to go to Bursa Malaysia, but they have a special market that also involves a capital market, like a stock market as well. So because of its non-bank status, so basically Chagamas is exempted from strict supervision and regulation imposed by Bank Negara Malaysia. So when Bank Negara Malaysia reduce the rate of interest, it doesn't mean that Chagamas will also reduce the rate of interest. That's why I said they have their own interest. They have their own way of doing business. They don't have to follow the government. In the concept of secondary mortgage market, the originator will actually sell the housing loans to be securitized in the capital market, the same like we have discussed. So originators sell the housing loan to be securitized in the capital market. So if compared to USA, where they have a state-sponsored enterprise, Ginnie Mae, Fannie Mae, and Freddie Mac, but in Malaysia, we only have Cagamas, the only entity in the secondary mortgage market. So housing loans, Cagamas, and Cagamas will issue securities to finance the purchase of the original housing loans. We have seen this before in the USA. The same situation applies, and then the function of Cagamas is basically to act as intermediary between the originator and investor. So basically, we have Cagamas is constitute the largest shareholders, which is Bank Negara Malaysia. The Bank Negara Malaysia holds about 20% of the Cagamas shares, and then other financial institution comprises 80%. So for this 80%, none of the individual financial institution actually hold shares more than 20%, like Bank Negara Malaysia is holding. So basically, Bank Negara Malaysia become the main shareholder for Cagamas, and the rest of financial institution only a little bit. But the combination of all the financial institution make it strong, which is 80%. But no individual financial is more than 20%. So in other words, Bank Negara Malaysia is still controlling the Cagamas business. So Cagamas rule, so basically number one is to encourage home ownership, and number two is to develop the private debt securities market. So encourage home ownership, you will provide necessary resources to enable primary lenders to grant more loans, and to provide liquidity by narrowing the gap between the maturity structure of the housing loan, the sources of fund. So provide financial resources to enable primary lenders to grant more loans. That means that Cagamas will actually come up with the money to pay the loans they have purchased, and then that amount of fund will actually be used by the originator of the housing loan to come up with more loans to their client, to their customer, and then provides liquidity by narrowing the gap between the maturity structure of the housing loans and the source of fund. So because, like I said, the mismatch between the time that the banks release the money as compared to the time that the banks is waiting to get the total outstanding principal. So by selling by making the existing mortgage illiquid, so basically the mismatch between the amount of money they release just now as compared to the amounts that they're waiting to get back, the time period they're waiting to get back. So as compared to when we sell the mortgage loan to the secondary mortgage market, they can get the money within a short period of time. So basically, the mismatch that happened before in terms of lending long and then collecting back lending long and then there is a word, can't remember the words that we usually lend long and short something. What it means here, the bank will release the money within a short period of time, but they will get back in a very long period of time. So basically, the mismatch will occur. But now, by selling the existing mortgage loan to financial institutions to the special purpose vehicle, so basically the mismatch is okay. To get rid of the existing mismatch. So it's better to have. So the liquidity process, the liquidity, through circulation, basically will actually help to narrow the gap between the maturity structure of the housing loans. So the benefit to house buyers, basically house buyers can obtain easy access to housing loans at reasonable cost, and they can actually obtain attractive and affordable housing loan packages characterized by low interest rate for the initial years. So there are so many types of mortgages that are available. Like I mentioned before, we have more than 160 mortgage products in Malaysia. So we can choose one of them. It's just a matter of name and then uh, which particular banks that we are approaching. So benefit to the seller, it is a good hedge against the interest rate risk. So because the interest rate, but especially the variable rate interest will actually fluctuate based on the market performance. So basically, the benefit to seller. So because the rate is basically lower than the present interest rate. So basically, it's a good hedge again the interest rate, and then the seller can actually obtain liquidity at a competitive cost to originate more housing loans and enhance the lending operation. So sellers, that means the originator of the housing loans, not sellers, that means the developers. So sellers of the mortgage loan to the secondary mortgage market. So it refers to a financial institution here, and the price their loans product competitively. So because they have money and then they can compete between themselves as long as the just interest that is a little bit higher than the Jagamas offer them. So basically, they will make little money from that particular mortgage. So benefit to the government. So it will help the government to achieve its policy of encouraging home ownership. That's why government from time to time have a home ownership scheme, and then we also have a Rumah WIP, we have a Rumah Selangorku, and then we have a Prima Housing, etc. All those it's a bit expensive, but the government tries their best to come up with all those things to help the citizen. So affordability is the main issue now. And then makes housing loans more affordable to the low income group. So just imagine that when we do not have Jagamas to play a role, so basically there will be no affordable housing loan because everything will be based on the interest rate offered at that particular point of time. And then you encourage property development and related spin-off effects, so more property development will take place. And the Jagamas role is actually to develop the private debt securities. So the private debt securities market was basically absent until the creation of Jagamas. So we do not have a securities market before Jagamas, and then the pledging capital market began to grow more rapidly after Jagamas was established, and then provides additional instrument for investing surplus fund, and then provide an opportunity for bond dealers to undertake the transaction in PDS on large scale, and then pave the way for other corporations to raise funds in the domestic market. So basically, institutional investors like financial institutions, they can come out with as investors as well. So when they sell the mortgage to financial institutions, so to a special purpose vehicle, so basically they can actually purchase back, not to purchase the loan, but to purchase the securities offered by the special purpose vehicle, by Jagamas. Benefit to the investors, high quality papers to investors. That means high quality securities that are offered to investors because they have come up with, they have filtered all the loans a couple of years before they consider it as good loans, before the financial institution actually sell to the secondary mortgage market. So basically, we have all goods loan, and then once securities issues, so basically we'll have good quality securities. Papers here refer to securities. So attractive channel for investment by pension funds, insurance companies, and banks with large surplus, long-term fund seeking long-term investment asset. So basically, the banks, that's how the banks make money. We save our money with the financial institution. So the banks have to invest in order to pay us interest, like saving deposit, for example. So basically, they promise us to pay 3% or 2% for if we keep the money for 1 year or 2 years. So it depends on how many years that we are going to save our money. So they pay us interest. So basically, in order to pay interest, they also have to invest. So when they invest, so they expect to have a profit. So when they pay us, and then out of the investment they have made, so basically they make more money that what they pay us. So in order to do that, one of the investment that they usually consider is to purchase mortgage-backed securities. So this is how they do. So in terms of Sagama's model, you can see here we have house owners, and then we have financial institution, we have Sagamas here, we have principal dealers, we have investors. So basically, home owners will actually approach financial institution to apply for the loans, and then financial institution will actually grant loans to house owners, which is considered as financial debt, and then owners will actually pay back the financial institution on monthly basis. So the money that are released here is very short, within a short period of time, and the money to be paid back to developers will take about 30 to 35 years. So mismatches occurs here, like I mentioned before. So when the mismatch occurred, so they have to sell in order to reduce the mismatch here. So they need the money from Sagamas. So by selling the full of housing loans to Sagamas, they will get the money. So this money will actually reduce the burden they have here in terms of getting back for a long period of time. So now this is a really short period of time, and then they also receive the money, the fund to cover this. So basically, the mismatch will be reduced. So Sagamas will pay the financial institution, and then how do they pay the financial institution? They must get money from investors here. So basically, Sagamas will issue debt securities, and then the principal dealers will actually remit the proceeds to Sagamas. So the investors will actually purchase the unit through principal dealers. So they will subscribe, or they will purchase Sagamas debt securities here to the principal dealer, and then the money will be remitted to Sagamas. Sagamas will actually be paying financial institution, and then this will actually reduce the mismatch, the gap of mismatch here. So basically, that's how the Sagamas system works. In terms of Sagamas model, so basically, in terms of, there are three liquidity models: securitization model, guarantee model. So basically, for liquidity model, it just seems like purchase asset which recourse, like I mentioned in the previous lecture. So recourse, that means option. Option means that bank can sell the units to the Sagamas, the mortgage to the SPV, and then they have options whether to actually get back after 3 years or 5 years. So that means purchase with recourse. But if purchase without recourse, let's the model here, securitization model, purchase without recourse, that means that when they purchase, so that means the balance or the remainings of the mortgage loan will actually be used as the base case for purchase without recourse. For example, I always give you example for 35 years of mortgage, for example. So they will only sell after 5 years. So the balance of the mortgage period is only 30 years by the time they sell to the secondary mortgage market. So the 30 years that they have can be sold to the secondary mortgage market for the whole 30 years. So only after 30 years, so they will actually get back the loan. So basically, so if you look at that way, there is no option. There's no option for the originator of the housing loan to sell the unit. So we call this purchase without recourse. That means they have to wait until the end of the mortgage period. But purchase with recourse, they will be given option after 3 years whether you want to proceed to continue with another transaction. But if you proceed with another transaction, and then you'll have a different rate, of course, slightly higher. That's what normally Chagamas do. So basically, when they come up with new interest, so some of the financial institutions they don't want to, so they get back the mortgage. So basically, because we call this asset purchase without recourse, purchase with recourse, they have option. So, and then Sagamas will actually purchase with recourse, and then they will actually come up with Sagamas bond or sukuk to be sold to investors. So the products which purchase with recourse program. So basically, they come up with the name of the product. You can check Sagamas website if you're interested to know what type of products that are available. And then the conduit exists for the purpose of liquidity management hedging. So, and then for securitization model, we have mortgage originators, the same things like liquidity model just now, purchase asset without recourse. And then we have warehousing. Warehousing, that means that we have seen the unbundled housing system before. So basically the warehousing will occur, and then they will actually the Chagamas as the SP will come up with the securities bonds as well as sukuk. Sukuk is the name for the Islamic products, and then bond is for commercial products. So they sells the ABS to investors. So investors will actually purchase without recourse, and then in terms of conduit, so basically they provide capital management, risk management, portfolio management. And then in terms of guarantee models, so basically the originators will actually, the insurance will actually guarantee all the securities. So unlike in the USA, like we have seen in our discussion before, so basically we have Freddie Mac, Freddie Mae, and Ginnie Mae. So basically they have their own function, and then the security will be guaranteed by the government. But in Malaysia, we basically the guarantees come from these guarantee models. That means Sagamas through trustees will actually get enough cover for the purpose of the loans that have been securitized. So basically, the premium have to be paid. So that come under guarantees. And then the unfunded. So sometimes, if they take under especially takaful, so the unfunded one will actually be paid back to the Islamic products investors, because they use a takaful system. Takaful system always like that. But you don't misunderstand. The products, although the name Islamic name, but it doesn't mean that the customer they are limited to Muslim only. Everyone can actually purchase the products. But for Muslim, of course, they purchase because it's considered halal. They do not involve anything illegal. But some other non-Muslim can also purchase. And then you come under mortgage guarantee program, and the conduit is for capital management, risk management, portfolio management. That's what happened in year 1997-98. Like I always mention, most purchasers of housing units, they actually use the conventional system when it comes to recession 1997. So basically, most non-Muslim investors, they apply for Islamic finance after 1998, because they know that Islamic finance is basically involve the fixed rate of interest. So no matter what happened to the market, so the interest or the payment is stable. So majority of the investors after 97 crisis, they started to purchase Islamic finance. But during good movement or good economic situation, usually non-Muslim, they prefer to go for conventional. But for Muslim, because of the restriction that we have the majority actually purchase created a mortgage loan through Islamic finance. So by selling the housing loans to the secondary mortgage market, the originators are able to obtain more funds to grant more housing loans to prospective house purchasers. So with more fund in the primary mortgage market, the primary lenders have the opportunity to lengthen the repayment period, which is more affordable, accessible, and attractive. So Jagamas will actually help to develop the private debt securities, thus providing alternative sources of financing to a private sector apart from conventional bank borrowing. And at the end of the period, the primary lender has the option to repurchase. This is the one that recourse or without recourse. To repurchase, that means with recourse, the loan sold to Jagamas if it does not agree to the new interest rate offered by Jagamas. Because after 5 years, for example, with the purchase with recourse, so that Jagamas will come up with new rate of interest as compared to the first offer. So basically, it depends on the financial institution whether they want to accept it or not. And then this will actually induce the primary lenders to sell, and the primary lenders do not have to commit themselves for the remaining life of the loan because of the purchase with recourse. So now we try to see the annual mortgage purchase by Jagamas. You can see here, internal community is a total loan of housings in Malaysia. So basically the annual total purchase of Jagamas. So not all, because it's subject to assessment whether the loans are good or not. But basically you can see the blue line here. Go ups and down like this. Something goes up, down, and then up again. So in terms of the annual total purchase, so you can check Jagamas to find the latest figure. I only have the one until 2014, but if you want to see in terms of the annual purchase, so this one I have the latest figure until 2019. So we have a purchase with recourse and purchase without recourse. So this color, the dark one, to show the purchase with recourse, which is become the majority of the transaction, and only in year 2019, I'm not sure for whatever reason, but they started to have purchase without recourse quite a lot, almost every year until year 2017. So in year 2013 and year 2009, so becomes the purchase without recourse is more than the purchase with recourse. So there must be some reason behind it, which I don't know, because there was no major event occurs except for 2008 because of the subprime crisis, and usually it takes effects, about 1 or 2 years after the effect. So basically, started from subprime crisis. So most purchasers, they started to sell without recourse. So that means they sell for the whole unexpired loan period to the special purpose vehicle. So in terms of annual issuance of securities, so basically we can see here the trend is like this. Until 2019, it started to drop, and then I believe that 2020 dropped further, 2001 dropped further, and then you'll go up again in year 2022. That's based on my projection. 2022, and then it will go to the peaks again 7 years after that. Only in year 2019 we'll have the peak figure like this, 2019, and then it start to drop again like this in 2019. So that means around 2019, 2000, 2000 and not 19, 2027, it will be peak again like this, and then started to go back. So when you are in the market, you have to wait until 2027. So that means now it's very, very critical situation. So now we see the capital market, so which is regulated by Bursa Malaysia and Securities Commission, where they have responsibility to improve standards on transparency, disclosure, accounting, and corporate governance. And the format of a capital market can be translated to several indices, such as KLCA and AMAS index, and the comparison within the region follow similar trends to Singapore for the last 2 decades. So we can see that how the things are happening, you know, in the capital market. So I have the one that if you look at the property cycle, I have discussed during seminar. So I have put more crises that we have. Then I try to establish the effects of such crisis to our property cycle. So it's a bit rugi lah if you did not join the seminar last week, because I'm not going to give you anything, about the seminar in this lecture. So the capital market is basically a place for a source of long-term funding for housing industry, and then the primary mortgage market, secondary mortgage market, capital market, we actually come up with PDS, or private debt securities, which are traded in the bond market to institutional investor, and institutional investors comprises of financial institutions, insurance companies, etc. We have discussed this, and compared to other countries, we have the same objective to prevent a shortage of housing finance by providing liquidity to financial institutions to improve household access to loans. And the success of the capital market actually depends on the primary mortgage market as well as the secondary mortgage market with strong regulatory framework, liberalized financial sector. That's why I said with strong regulatory framework, we use housing finance to regulate the economy after recession. So the type of Cagamas that we have in the type of bonds that we have in Cagamas that published by Cagamas is in the capital market are Cagamas fixed rate bonds, Cagamas floating rate bonds, Cagamas short-term Cagamas note, Sanadat Mudarabah, Sanadat Cagamas, Cagamas Vitamin Tama Haji. So basically, if you want to know details about all these products, you can actually go to Cagamas website. And then Cagamas share in total to of Malaysian private debt security, you can see here in 1998. So they started with very low bonds or sukuk. So and then increased from time to time. So the increase in the popularity of capital issuance by other institutions after the establishment of Cagamas. So come to 2014, it's considered about 8% of total PDS. So basically you can see here PDS outstanding and Cagamas bond outstanding. So if you look at the latest figure in 2019, for example, you can see that the foreign the conventional bonds represent quite a lot, with 21 million, 21,493 billion. That means 21 million. I'm confused between million and billion actually, how to convert this. But never mind. What we can see here in terms of the percentage. So basically, we have conventional loans for 2019. So it represents quite a lot, it's about 21%, and then Islamic financing about 16%, and then followed by conventional loan as well as financing securitized is very small here. And then in terms of conventional bonds that we have in terms of Malaysian ringgit, and then foreign currency, and then sukuk mudarabah. So basically, all the outstanding Cagamas Group debt securities and loan financing. So you don't have to remember all these figures, but if you want to know in detail, so you can actually check Cagamas website. But you don't have to remember all the figures here, just to see the trends, so to understand this. No need to come up with the figures. And then when we see the interrelationship between the secondary mortgage market and the housing market, so basically we have primary mortgage market, secondary mortgage market, and then we have securitization here. We should have a capital market as well here. So basically, this is how the relationship happens, like we have discussed before. And then we have a tutorial here. So discuss the role of SPV and its impact on the Malaysian housing finance system. So basically, this is what we have for today. Very fast, because I need to finish it by 11 o'clock. So Reda will call me. So I think if you have any question, maybe I'll let you have one question only. And the rest you have to prepare. If you want to prepare, it's up to you. So we can actually, ask me during tutorial tomorrow. So tutorial tomorrow will start around 2 o'clock, unless if I give you any notice, further notice. So any question before we stop?
Doctor, what is meant by principal dealers?
Principal dealers means that the entities that actually get all the securities. For example, for mutual fund, for example, the principal dealers, for this product, the mutual funds company will actually purchase all the mortgage-backed securities based on the amounts of fund they have from their client. Clients usually come from people like us who cannot afford, or who are not eligible because we are not the one of the institutions. If we approach on individual basis, so definitely we cannot. So the principal dealers in this case is basically the mutual fund company itself. For general thing, the principal dealers is just like trustees. So trustees is the companies that have been appointed to look after, to make sure that the business or the securities go ahead as planned, and if anything happen, they should have enough insurance. And then just in case if there is other one party sue another party, so basically trustees will actually be responsible to come up with, to solve all those issues. So when it comes to principal dealers, it's just the same thing. So they will actually get all the securities from Cagamas, and then investors will actually approach them, regardless either institutional or individual. Individual will go through mutual fund, like I said just now, but mutual fund companies plus all other institutional investors will actually go, to principal dealers in order to purchase the products. Okay, so I cannot stay longer because they call me shortly. So I think that's all for today, and then prepare for tomorrow for our tutorial. If you do not prepare, that means I will not be happy as usual. So if I'm not happy, that means you also wasting your time, because I just wait for you to give me the answer, not for me to give you lecture. Okay, thank you very much, everyone.